rise in Treasury yields earlier in the week has dampened risk appetite again. Hopes that the Fed will soon end its monetary policy tightening cycle are fading. Many market participants are pessimistic. InstaForex analysts have studied the mood on Wall Street and are ready to share their findings with you. This is a fresh review of the US stock market. Stay tuned. Although Wall Street kicked off the new week on a positive note, trade was choppy, with the major indexes recouping only a small part of the early losses. The Dow Jones recovered by 72 points or 0.22%. The tech-heavy Nasdaq added the same number of points, rising by 0.63%. The benchmark S&P 500 index gained only 12 points or 0.31% to close at 3,982. Likewise, major US stock indexes started Tuesday with gains. Key stock index futures rose by 0.15 and 0.43%, signaling that optimism remains shaky. The S&P 500 index is expected to trade in an intraday corridor between 3,940 and 4,040 points. US stocks edged higher slightly on Monday as investors engaged in some bargain hunting after last week's losses. All three major stock indexes added more than 1% shortly after the opening of the session, partly due to the lower Treasury yields, and all three closed well below base session highs. Stocks steadily lost ground throughout the session as the US Treasury yields bounced off daily lows. Also, Fed member Philip Jefferson said on Monday that he had no illusion inflation would quickly return to the target. He also added that the regulator intended to keep restrictive monetary policy in place for as long as necessary. Data showed that new orders for key US-made capital goods advanced more than expected in January, while shipments of core goods rebounded, suggesting a rise in business spending on equipment. US stock index futures remained under pressure on Tuesday as the Treasury yields rose again on expectations of a further interest rate hikes due to the high inflation and the country's strong domestic economy. Yields on the two-year Treasury note, which tracks investors' expectations of the Fed's interest rate path, increased to 4.8%, trading just below a nearly 4-month high posted during the previous session. Traders are beginning to price in the possibility of a greater 50 basis point rate increase in March. At the same time, the odds remain low at around 23% according to Fed funds futures, which also suggest that rates will peak at 5.4% by September. On a Friday, France and Spain reported data on inflation. The figures came in hotter than expected in February, making the final day of the month uncomfortable for markets. The United States will see the release of consumer confidence data for February, the Chicago PMI, the Richmond Fed Services Index, and the Dallas Fed Services Index. During pre-market trading, the situation in the US stock market is likely to change depending on the coming macro results. The USD index almost came to a standstill after pulling back from its highest levels. It hovered around the 104.60 mark intraday. Speaking of its daily outlook, the US dollar index is seen to be trading in the 104.20 and 105.30 range. The greenback stabilized on Tuesday and strengthened against the Japanese yen. It has been bullish in recent weeks. The latest upbeat macro data in the US have fueled expectations that the US Fed may raise interest rates higher than initially planned. Although hovering near 104.60 and 104.70, the US dollar index gained 2.5% in February, the first monthly increase since September. In addition, US Treasury yields rose higher, with the two-year inflation-sensitive yields back to a 3.5-month high. When it comes to the coming macro releases, they are likely to boost the USD index. Yet it will hardly be a strong rally, after all expectations of the hawkish Fed have already been priced, so a more powerful driving force is now needed. As for USD CAD, the pair has managed to show both weakness and strength today. It fluctuated intraday, gaining some 0.07% and reaching 1.3584. The pair is seen to be trading in the 1.3540 and 1.3620 range during the day. In fact, the loonie could have edged higher today. The greenback stabilized, the oil quote showed growth. Alas, Canada's GDP came worse than expected. In December, Canada's GDP edged down by 0.1%, following a 0.1% uptick in November. The market has expected figures to remain unchanged. In January, the Canadian economy likely increased by 0.3%, preliminary estimates showed, and the Canadian economy stalled from the previous quarter in the fourth quarter that marked an end to 5 consecutive quarters of growth. In the third quarter, the economy expanded by 0.7%. Given the signs of a potential economic downturn, the Bank of Canada might take a softer stance on a monetary policy. On Tuesday, all quotes went up amid optimism around China's demand recovery. Brent futures climbed to 2.19% to $83.83 per barrel, and WTI crude futures were up by 2.2%. The crypto market trades mixed today, with its main assets hovering between their support and resistance levels. After a failed attempt to break through the mark of $23,750 per coin, digital gold pulled back to a more stable high. BTC USD recovered by 0.4% to $23,475 per coin intraday. Meanwhile, Ethereum and Litecoin gained some 0.3% and 1.6%. Solana and Ripple lost around 0.4% and 1.6%. On the back of rosy macro data from the United States, optimism around risk assets eased somewhat. Speaking of news in the crypto industry, Robinhood announced on a Monday that it received an investigative subpoena from the U.S. Securities and Exchange Commission in December regarding the listing of cryptocurrencies. The CAC claims that pre-existing securities laws also apply to digital assets and that many crypto tokens meet the definition of a security which the crypto industry has previously criticized. Robinhood said the subpoena it received from the Commission was regarding the supported currencies at the Robinhood Crypto LLC, which is the subsidiary of the company, as well as its custody of cryptocurrencies and other platform operations. When it comes to the outlook for BTC, if it breaks above the resistance level of $23,750 per coin, it may then hit to retest the $24,200 high. Otherwise, it may drop to $22,800 per coin or even lower. This has been our wrap-up of a US trade. Until next time, see you tomorrow.